Good afternoon. Good afternoon, everyone. This is Don. It is Sunday, July 9th, hot as blazes here in Tampa. And we'll be swimming with Ted shortly. Hope you guys are staying cool and having a wonderful summer. We wanted to bring to everyone's attention, especially annual members, of a new beta strategy that we're calling the Stinger. And I want to describe to you the thought process behind the Stinger, how we set it up, what we did. We've been running it over the last week and a half. Last week was a full week of running, albeit a holiday week. We want to share those results with you. And at the same time, whenever we have a beta strategy that is really holding some promise, we believe, we're going to go ahead and get that out to everybody. But let me just take a moment and explain what a beta strategy is and what it is not. You might think of it as maybe like a developmental airplane for the military. You know, when an airplane first comes out, it's in a developmental stage. These strategies that are beta, they're developmental. So please go slow. Please go carefully with it. We're still vetting it out ourselves. We haven't run it on all markets. We haven't run it with all configurations, and we're still learning. If you have the time and the interest and you want to do that, that's and we want to send you the most, well, we're prepared to send you all the betas, but the most promising ones, such as the Stinger, we will send it to everybody. So we want you to have a chance. So please know, though, as you press it into service, think of it as a developmental strategy, not one that has been fully vetted and fully operational, although we have high hopes for it. Now, this particular strategy, I want to describe to you the thought process behind it. A lot of our other strategies trade at small levels and trade rather frequently. Fast, you might think of it. We wanted to see if we could develop a strategy, in those fast strategies where we've all come to realize that they may not be able to run 24/7. They run for short periods of time, maybe a few hours or a few days, but relatively short. We wanted to see if we could develop a strategy that could run all the time. So maybe the other strategies, staying with the analogy of a fighter airplane, maybe a fighter only is in the air for short periods of time and then has to come back to the base and recharge. Wouldn't it be nice if we had a strategy like an AWACS or something that is constantly up in the air, and you turn it on Sunday night and you run it for the whole week? Maybe you scalp it, but for the most part, can it run on its own? That is the idea. I'm going to share with you the results here. I also want to let you know we're going to go into the settings and review the settings with all our annual members here in a moment. The inclination with a lot of these strategies for new traders is to make strategies run fast, to make them run small. The idea being, or maybe the concept being, is that you can mitigate risk. Well, we cannot eliminate risk. We cannot. If you take a strategy, all strategies for that matter, and set them so fast, there won't be a whole lot of difference probably between any of them if you set them too fast. If you take this strategy and set it really, really fast, it might be like maybe any other strategy. So it might, I want to point out that it might be a little counterintuitive for some members, for some traders, to slow things down. Chris in Jacksonville is always, telling me, Don, when I slow this down, slow that down, it does a lot better. Matthew is giving us some feedback on the Swing Machine Cubed, and he's actually slowed it down a little. So when you do slow it down, Of course, the drawdowns could be bigger. The run-ups will be larger, of course. Maybe you want to, in the interest of controlling your risk, and I understand that, is reduce your leverage. So this will be a leap of faith. It's going to take time. What we did last week was to run the stinger on Sunday night, and we ran it all week. And let me show you the backtest information of what we looked at here. Let me bring this into view. This was the backtest, and this backtest is only let's see, it's actually a couple of weeks worth of data, and we did a backtest a few times, and in fact I just ran this backtest again. And I'll explain now, and as a friendly reminder about backtests. When we run a backtest, we're trying to do a couple of things. One, yes, we want to see, is this thing going to be profitable? Is it going to be robust? We want to see the number of trades. We do want to see the percent profitable. This particular backtest is showing it to be low. We'll comment on that in a moment, but we do want to see some of that that information for sure. And then we want to use the backtest as a model so that when we do run it, we can compare, which is what we're going to show you in a moment, what we actually did versus the backtest. There's another purpose for doing a backtest though, and that purpose is to run it not just once, but maybe run it every day or every couple of days. And what we're trying to do in that instance is to capture the flavor or the tempo of a particular market. Once we know we have a strategy that is robust, that is likely to perform, we might want to backtest it more frequently. We have that capacity so that we capture again the tempo. Now, when we first did this backtest, in fact, I may have sent a video on it, I'm not sure, a week ago, the profit factor was much higher. I think it was like around 3 or 4, and the winning percentage was also much higher. Now, I just did this here on Sunday, and it came in what it came in at. I'll have to take that into consideration, but what I want to show you is the actual result. And so I'll leave that up. And this is the result for the week. $3,518. Profit factor 1.95. Total number of trades 11. Didn't really trade a whole lot. Percent profitable was 54%. Now, this strategy actually took a losing trade. We bogeyed the last hole. The last trade of the week was a loser of about $1,000. And so, you know, it could have been whatever, could have been much more, right? So it is what it is though. And I'll scroll down and show you. So the average winning trade was 1,200. The average losing trade was 739. We'll scroll down and let you see this was the trading period, 4 days, 11 hours. Percent of time in the market, 68% of the time. Not all the time, but quite a bit. And again, it's meant to run slow. Let's go to the trade analysis. Total number of trades 11, 6 winners, 5 losers, the last one being a loser, which was unfortunate. Average time in trade, 6 hours and 40 minutes. Very slow. Average time between trades, 3 hours and 40 minutes. So you want to know this because if your trading expectations is I'm going to come in and only trade for an hour or two on a given day, this probably isn't the strategy. Now, how might it run if it's sped up? I'm not really sure, but it wasn't designed for that. we designed it to run slow. And even this particular back test, when I look at this, I guess I can leave that there, is trading a little bit more. And so I want to now take a moment. We're going to take a break here in the video, and I want to get into the settings and the specifics for our annual members. If you've listened to this video and you are a passerby on YouTube or a monthly member and want to know more about who we are, what we're about, and definitely let us know. You're welcome to visit the website. You're welcome to give us a shout. Annual members, please stay with us for a couple of minutes. This idea, though, this getting, too quick with our trading, we also describe it as resolution. And sometimes we want the resolution to be really tight. Other times we want a strategy to have a resolution to run slower or to back up. If you are just inches from the back of an elephant and you're looking at his butt and you're just inches away, you may not be able to see what it is you need to see. You won't even know that it's an elephant. It's not until you back up and slow down that you can see the full perspective that the thing in front of you is an elephant. The same is true with these strategies. Getting the right resolution is critically important. In addition, this particular strategy is running on a Renko chart. And I want to share the resolution that we used last week and what we're going to do this week, and also how we came to settle in on the size bricks that we want. Now, annual members may want to run this on something other than Renko. And quite frankly, this is so new, we have yet to do that. So I really don't know. Okay. Again, we didn't want to sit on this. We want to, get it out to everybody so everyone has a chance to work with something that is new. But remember, this is a developmental strategy. So let me take a short break here and come back for annual members and give you the specifics on the settings.